You asked me about the capital raising for KenGen on the stock exchange. Yes, KenGen is a public company. We went into the market in 2006. We did an IPO in 2006, which was then the most successful IPO in Kenya, oversubscribed by 360%. We ended up with a register of 275,000 shareholders. That's before Safaricom came in the following year, and they ended up with 800,000 shareholders. And this was deliberate. We had convinced the government to sell some 30% of the company to the Kenyans, and therefore we pitched our tent very wide. Our allotment criteria was skewed to the small investor, and therefore we ended up with a lot of shareholders, 275,000 shareholders. We still have currently on our register about 216,000 shareholders, which brings in logistical issues of AGMs. The first AGM we actually held it at the National Stadium because these were first-time investors, and they all thought that they were coming to get their dividend check, and they all came to the AGM. But the numbers have now come down. After listing in 2006, we have a huge expansion program that we intend to do as a company, as a country, in terms of power generation. And this, we are looking at about $4.5 billion between now and 2018. And what we did is to look at what options do we have in terms of funding that. And we got a financial advisor, and through that, one of the options that he came up with was to raise money through the capital markets, to raise a debt. So we went out looking for $200 million last year, and we had a green shoe option for another $150 million. As it was, again, we ended up with about $380 million US, and we exercised our green shoe option and raised the $350 million, which was in a way different from what we have always done before. Our funding has always been through the DFIs traditionally, but this was a departure from that, and we were able to raise that within a period of 3 weeks, as opposed to some $50 million that I had been trying to raise from the World Bank for the last 4 years. In terms of the stock exchange, as I say, wearing my other hat, I'm also the chairman of the Nairobi Stock Exchange, and there has been really quite a big improvement within the stock exchange over the last 4 or 5 years. We are now fully automated. We have ATS. Even the bonds themselves are traded through the ATS system. We obviously are fully demobilized. We got the CDS, and the regulator, the Capital Markets Authority, is very, very supportive of initiatives like ours to try and raise capital through the stock exchange. I just highlight some of the things that we are trying to do ourselves. In Kenya, it's a two-pronged approach. One of the things is that the government still has about 144 state-owned enterprises, and we are really pushing the government to put a lot of those on the stock exchange. This is areas where the government has invested over many years, and we are trying to convince them that they need to cash in part of that. And one of the things that the government has done, there is an incentive in terms of the amount of listing that you do. If you do 40% listing, you reduce your corporation tax from 30% to 20%. If you do 30%, you reduce to 25%. So that's, in a way, trying to get more people, or at least to list more, so that it can improve on liquidity. The other approach we have is on the family-owned enterprises. There are a lot of family-owned companies in Kenya, and we are aggressively approaching them and really trying to show to them the value proposition for listing on the stock exchange. There has been a few successes recently, and with that we are able to build on to more family companies. We have a few which are slated sometimes for next year, and we are really encouraging more and more of those family companies to come on board. Thank you.
Doing business in Africa, you can't afford to be without Africa Investor.